And EB, how do you manage your emotion in a market like this? Or do you even try? You've been in the game a long time. You just spoke about patience. There's a lot of people here who are probably sitting on positions and wondering when, because they've heard that narrative before.
I shook that off a long time ago. I don't know. I mean, I'm like perpetually much more negative than people realize. I mean, I think if I restarted life, I could be a bond investor, because as a bond investor, you start being so negative that you basically finally end up agreeing you'll finally buy something. I mean, it's like, and I think if I could redo my career, I would be, a credit analyst or whatever. It's just, I think I'm wired for it. But I mean, you really do have to like de-wire all emotion. It's really like bizarre when you think about it, and you kind of are not excited when you're. I mean, you develop a way of thinking, and then once you do that, you get very comfortable with that, and you get very you can handle things much better. Now, let me just say, just to give you some idea, because some people might not have been around as long. 2016 January, I really thought gold was, I just couldn't even defend it anymore. I was like, 2015 December, it hit 1,050, it was a way down. I'm telling you, all of a sudden, like about right now, 2016, like the last week of January, for some unknown reason, boom, started moving, and it kept moving every day, all the stocks, all the way to August. And the whole time that happened, most people were like, oh, it'll never last, because we've just been going down for 4 years. And I'm telling you, there were stocks that were literally junk that went up 1,000%. And it didn't matter what was going on. Nothing was going on. It just up. And there were great stocks that went up too. But what I'm saying is, when that tide comes in, okay, or 2010, for example. I mean, the problem with 2010 was that these stocks like that are here, this type of stocks, went up so much that it made you feel like you were a genius, because every day when you looked to your portfolio, it was green all over the place, right? So you were just like, I'm going to be up for an award as a portfolio manager. And what's happening is the tide was coming in, and so we mistook that for brains. And so I think you try to develop a way of thinking that gets rid of the greed and the fear. Really, like you can do it. Believe me, like you can really do it. It works. And then you say, I still need to be exposed to these turns, because when that turn happens, you're not going to believe it. You're not going to believe it. I mean, you've done all your homework, and you're still not going to believe it, right? So you have to be positioned, because you catch that move, and it can change your life.
Quick break here, guys. Today's episode is brought to you by Copernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Copernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galliano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and VRIC on his board at Copernico Metals. Check out copernicometals.com. Now back to the interview. You touched on the harder part of the trade there, right, is the exit, right? When the positions are moving up. And of course, we can all make the claim that we'll take profits, of course. We're up 100%, we'll take half the cash off the table. But you probably had a decent amount of conviction when you placed that bet, and then the share price starts rising. All that does is reaffirm, I'm more right than I thought I was, right? This is a better decision than I thought it was, right? And so anticipating that is going to happen to you, and you're not exempt from human emotion, is hypercritical, because then at least you can expect it. And when it arrives, maybe you can deal with it a bit better. I think a market like this is really great for investors because it's an investor's market. And I think a lot of investors identify as investors but act like traders, right? They don't act like owners of companies. They're just trading share prices. And that's not a sound strategy, or the one that works most often, right? What works most often is patience. And investors, I think, I have no ability to time the market, not for the life of me. Never been able to. I would tell you that anybody who says they can is lying, right? So then what game are we playing? if we can't buy the upswing, right? Well, we can identify when things are cheap and buy those things, and then sell those things when they become expensive. And that's the game. But to that point, like, what's your typical time horizon? I'll go to both of you on this one, because two different perspectives. In this market, you know, what is a responsible expected time horizon that you might be in a position? Is there, and it's unique to each of you, I'm sure, but maybe Evie, I'll start with you.
Yeah, so I am definitely right now focused on 2030. Okay, now let me just say real quick, I think everyone should really digest what I'm about to tell you. So I met David Rockefeller. This is about 10 years ago, and I met with him over about a water project, and he was telling me that he said, we think in a 30-year time horizon. And I was like, wow, this is a really long time. And he's like, well, I mean, we've found that that's how we want to put our money to work, is by thinking about what will life be like at this period. Now, I don't quite think about 30 years, but when I think about 2030, you know, what do I think? Well, I have a pretty good idea that the gold price will be 5,000 at that time, which, you know, that sounds like not a big price jump, but you need to realize that's like maybe $32 trillion worth of gold. It's kind of a lot, you know. So like, I think that'll be a plausible scenario, because I think the pile of government debt doubles every 8-year presidential cycle. You know, it's about like 35 trillion now, so maybe it would be like 60 trillion or something then. Okay. So you see how I come up with all these numbers, and I think that's going to be the case. I think, you know, I have a target for like Bitcoin and all these different things based on this same way of thinking. And also, what will our life be like then? I think about that too. So then what do I want to own as I'm traveling in that direction? And that really gets you out of the what is the price every 10 minutes of my stock, you know, because that is going to fluctuate. And sometimes when that is you know, held underwater, that you can compare that to where you think you're going there, and it's really helpful in pointing your ship where you want to end up. That's what's important. You know, you get in the ship here and you point it 1 degree off, and you end up in China instead of in Japan. I mean, that's a big difference of destination, right? So that's how I think about these things.
Yeah, I love that. And the time horizon is so critical, because even in a secular bull market, if the tide is rising, inside of that tide, there's still going to be, and probably will be, crazy volatility, because short-term traders get involved and overbuy, and then they panic and they oversell. And on the long-term trend up, there's still going to be massive fluctuations in price along the way. You need to have the mettle to hold on if you have conviction in your thesis and you believe the big picture and you're clear on your time horizon, and you know you're not investing for next quarter, you're investing for 2030, then maybe what happens next quarter doesn't matter if your thesis for 2030 is still intact. But if you don't have that thesis or conviction in your time horizon, you're far more likely to get shaken out because of near-term volatility that doesn't even apply to you if it doesn't relate to your time horizon. And Alex, you're similar. You're investing capital now for cash flow in the future. So walk me through how you process time horizon.
Yeah, it is much more long-term thinking for our company in terms of what investments are making now, how these companies will grow, how the projects will continue to bring in cash. So it is much more of a long-term view. Even personally, as I've invested in the mining stocks, for me, it's, you know, at least a 5-year vision of where the company needs to get to.
Well, the final piece on this that kind of ties in is, like, I think, and you and I have talked about this, Jay, a lot, is that people rarely think about what they want their life to look like in 2032. Like, what kind of life do you want in 2030? And what position do you want to be in during that time? And the answer really should be very specific. I think the more specific is, the more likely you'll be to end up there. And it really should be an elevated place from where you are today, okay? So, I mean, this is, I think, an important way of thinking, and it really straightens out a lot of these other headaches that we've been talking about. And people would be wise to, just a few minutes on that, put you ahead of your peers, I think.